So Superintendent Harris, thank you so much for joining us today.
Thanks for having me.
So let me start out with some introductions. So I'm Donna Parisi. I'm a partner here at Shearman and Sterling, our financial services and FinTech practice. And several years ago, we launched our FinTech Foundry initiative to really focus on our clients in the community and to help them add value to their FinTech journey. So Superintendent Harris, tell us a little bit about your background and your career.
Sure, happy to do so. Good morning, everyone. Thanks for having me. I have spent my entire career in financial services, first at a law firm, much like Shearman and Sterling, called Sullivan and Cromwell, downtown, where I started as an associate before going to the Treasury Department in the Obama administration as a senior advisor to the Deputy Secretary, and then to the White House National Economic Council as a special assistant to President Obama for economic policy, overseeing the financial services portfolio. So implementing Dodd-Frank, GSE reform, and it was there that I stood up the FinTech task force, interagency task force, as well as a distributed ledger task force as part of the administration. After the administration, I thought, well, I've done all this work on FinTech and FinTech policy. I should put my money where my mouth is. And I went to Silicon Valley, started a company with a group of friends, an AI insurtech company that we grew and took public earlier last year, before spending some time in academia and then having the great honor of being appointed to this post by Governor Kathy Hochul.
So you bring a wealth of experience and knowledge to your role at the New York State Department of Financial Services. And I know you just came to the end of your first year on the job. Can you share with us some of your reflections from year one? What do you consider to be your major accomplishments?
Yeah, it's been a whirlwind year. It's gone by very quickly, and at the same time, it feels like maybe it's been 10 years. For folks who don't know, the Department of Financial Services regulates seemingly everything in financial services. We regulate 80 foreign banks, 17 GSIBs, 120 state chartered banks, about 1,700 insurance companies in health, property, life. We're the group-wide supervisors for AIG and MetLife. We regulate debt collectors, pharmacy benefit managers, student loan servicers, mortgage servicers, and crypto. We're really the only prudential regulator of cryptocurrency in the country. And I say that knowing that the OCC dabbles in the space as well. But we really are the only prudential regulator who has rules on the books and the affirmative authority to regulate crypto. You know, in the first year, we've done a lot, especially around crypto. When I came into the agency, there were maybe 3 people in the unit. And New York has really been a leader in crypto for a long time. The BIT license and the limited purpose trust charter came online in 2015. So we've been regulating the space for a long time, but the unit was just understaffed, didn't have the talent it needed to regulate and keep abreast with the developments in such a fast-moving space. So we've added several dozen people to the unit. We're hiring all the time in the spirit of UNGA. I know there are a bunch of public servant-minded folks here in person and in the audience. So we're really growing the team. And we launched an initiative called VOLT, which stands for Vision, Operations, Leadership, and Technology. Vision meaning we want to continue to be the preeminent global regulator for cryptocurrency and have cryptocurrency live and thrive here in New York and do so safely. Operations, there's been a lot of talk about just how long it takes to get a BIT license or a limited purpose trust charter in New York, to get your products approved. So we're working very hard to make those operations more streamlined and more efficient. Leadership, making sure that we have the most talented people in the department. So we've brought people from industry, from companies, from consultancies, from the federal government, academics to build out that unit. And technology, just as we think about regulating technology, it's important that we ourselves are using technology for transaction monitoring, to look at insider trading, to look at AML, BSA, and we do that. But the one thing I think that's really come out in the last year is, with all the talk about the speed to get the license or the speed to get the new product approval, and that is important. We want to be efficient, but speed is not really the right metric. It is much more important that we are engaging in the space and getting things right when we are licensing companies, when we're approving new products, new coins, because we see what happens when there isn't a regulator in place or when perhaps they're rushed. So when I think about the work that we've done at the department, including our blockchain analytics guidance, which you haven't seen from any other regulator, including our stablecoin guidance that had reserving and asset mix requirements, redemption requirements, independent attestation requirements. You haven't seen us, frankly, license companies that then went bust because we have capitalization requirements. You didn't see us approve algorithmically backed stablecoins, right? So I continue to say, I think one of the big learnings of the past year has been speed is not the answer. Efficiency is important, but it's much more important to get it right so that we can protect consumers, ensure the safety and soundness of institutions and the integrity of the market, and then grow the space responsibly.
Okay, so we're in the middle of a crypto winter, yet DFS has remained steadfast in its commitment to being a leader in the digital asset space. You just talked about what's happened, in the last year and in the past. So what changes are you observing currently in New York's digital assets market? And given your experience at a startup, has this had a noticeable effect on the startup landscape?
Yeah, I mean, I think in crypto and more broadly in FinTech, right, we've seen valuations maybe get a little bit more realistic. We've seen, I think over many years, we've seen an increased focus on compliance, even by venture investors. It's one of the things we did in my company is we were very compliance focused from the outset. I think, it's obviously horrible when you see consumers get caught up in things like the crypto winter, right? People who did not understand potentially the risks in the things that they were investing in and engaging with. I think the silver lining is it refocused industry in the space on the importance of compliance, on the importance of clear, transparent rules from an engaged and fast-moving regulator.
So, we remain concerned, right, about the risk that cryptocurrencies pose to consumers. We want to encourage innovation, right, because there's so much promise to this technology, including the promise of inclusion. So how does DFS seek to strike the balance between consumer protection and continued innovation in this space? And what are your views, like what more should be done from a regulatory and legal standpoint to balance those two objectives?
Yeah, this is always the question, right, for a regulator. And I think it's particularly imperative as a state regulator. And one of the things I think is so wonderful about DFS is we are at the same time very local as a state regulator, but because it's New York, because it's the financial capital of the world, we are also national and indeed global. And we have international regulators all the time come to us and say, we know if New York has signed off, the company is good to go. It's really a badge of honor and a good housekeeping seal of approval. But you're going to hear more from us soon on consumer protection requirements. We already have robust disclosure requirements in place, but we're going to make those more clear. We already have capitalization requirements, but I think there's more we can do to make sure that institutions are safe and sound. I mentioned our stablecoin guidance that we put out in the spring that required one-to-one reserves with on-chain assets, required T+2 redemption time, talked about the asset mix that's required in the institutions that can hold those reserves. And so all of that clarity, that transparency is incredibly important for protecting consumers and again, for protecting the markets. And I think, we know that DFS historically is famous for its enforcement actions. We bring those as well. And we have done that recently in the crypto space. We have ongoing investigations now, but I think we're all better off if we're not trying to regulate by enforcement. Of course, when companies run afoul of the law, we will bring enforcement actions, but how much better is it if you can prevent the bad action in the first place through clear rules, regulation, guidance, and engagement with industry? So there's a lot more to come from DFS, and we always welcome companies to come in. My rule to everybody is never surprise your regulator, right? If you're thinking about a new product, there's a new coin, you have questions about how the law applies to you, come in and sit with us and ask us. It'll make for a much better relationship and conversation.
Yeah, and I will tell you, from my perspective, you made the point earlier, for a startup, right, they really do need to get their regulatory house in order, because when they go to raise their next round of financing, those questions are going to come and they better have some good answers to those questions.
Absolutely. And I think it's part of, having this robust licensing regime that we have with the BIT license and the limited purpose trust. I think investors know, just like other regulators, if you pass muster in New York, that really is a good sign of having your house together. We also have a program called DFS Exchange, which is sort of like office hours. You can come in, talk to our team of data scientists, of blockchain experts, of compliance experts. We've brought people in from industry, from federal regulators, from academia, from international regulators and companies. So it really is a robust and diverse team that's happy to talk with folks, and not just about the particular issues that you may be facing as a company or things you're thinking about, but about trends in the space. Where is this all going? Because we'll all be much better off if we're working together to get there.
So most of my clients, they want a regulatory roadmap, right? They want some regulatory clarity, which New York State is taking the lead in providing, but we're on a global stage, right? So how is DFS engaging with US federal and other regulators, international regulators, other countries' regulators, so that we have a system of global regulation that makes sense?
Yeah, absolutely. There is not a day that goes by when either I or a member of my team are talking with national regulators, other state regulators, international regulators. We are very friendly with the alphabet soup in DC, and really do talk with them daily. Same goes for Treasury, Congress. We really are deeply engaged, and I was incredibly gratified during the markup of the House Financial Services Bill when Representative McHenry said, we should be looking to New York. New York is a leader in the space, and we hear that refrain over and over again from the federal government and from international regulators. I think for us, many of the things we think about are how do we streamline requirements. We already know that, especially internationally, regulators will look at companies that are licensed in New York and say, this is great, this is a stamp of approval, this is the good housekeeping seal, and it makes their review easier. But we're spending a lot of time with FCA, MAS, Bundesbank, on and on, to say, well, should we think about reciprocity regime? Should we think about passporting? How is it that we can have a company licensed in New York? And yes, they may still need to be licensed with your regulator, but maybe there's a streamlined approach. And we do that with other states as well. So, the space is developing quickly. I think we're gratified to see the federal government now digging into this, in all candor. We're hopeful that they will appreciate the work that happens on the state level, especially in New York, and take that into account rather than reinventing the wheel. And so we talk with them about that quite a lot as well.
So I mentioned earlier that digital assets, blockchain, right, has such a promise when it comes to inclusivity. So what progress do you think the industry's made towards that goal?
Yeah,
what more work needs to be done? Because I'm sure there's more work that needs to be done.
There's a lot of work to be done. And I think whether it's blockchain and crypto or FinTech more generally, there's been buzz for years and years and years about the potential for financial inclusion. But if you look even just in the United States at the FDIC surveys of those who are underbanked and unbanked, you see over the last 10 years, we've included maybe 1.5 million more people in the financial system. And that seems like a lot, but if you think about the rapid pace of innovation, the number of new products and services that are come online, it doesn't really compare. You would think with all that innovation, with all those new products and services, with so many smart people thinking about this every day, all the time, that we really would have made far more gains in terms of financial inclusion. And it's not just inclusion in the financial system, but it's financial health as well. Right? It's not enough just to have a bank account or to have access to payments mechanisms. You really need to have a financial system that works well for you, can help you with your own financial resiliency, debt management, planning, all of these things. So I really do challenge the industry to do more and think more about inclusion, and not just innovation for innovation's sake, but what is meaningful innovation? How can you really include more people and do so safely? I actually, we have companies come in all the time. As I mentioned, we like to engage with companies about particular regulatory issues, but more broadly. And people come in and they say, oh, financial inclusion, we're including, all these people, all these LMI, and I go, great, how many? Silence, right? How many people that weren't included in the system before are now on your platform? Oh, we don't really know. How many LMI people, right, are now, well, we don't really measure, right? And I say this not just to the FinTech and crypto communities, I say this to incumbents as well. I don't have a lot of tolerance for fluff. I like data, I like information, I like facts. So if you come in and talk to us about all the stuff you're doing on inclusion, fair warning, you better be prepared to back it up. But if you can back it up, and if you are really working to make gains in that way, we will help you do so in a way that's safe and compliant with our laws.
Thanks. So, I started out asking you to reflect on your first year in office. I'm now going to turn to asking you to look ahead to 2023 and beyond. So what are some of the things that you're going to be focusing on? What are the challenges that you face?
Yeah. Well, it's unrelated potentially to the crypto and blockchain universe. People ask me about surprises from the first year, and I mentioned at the top that we regulate, among other things, insurance. So I always sort of joke, if you would have told me when I came into this job that I'd be working on monkeypox and polio and other things, I would have been like, it's 2022. We're talking about polio, but we are. So I don't really know what 2023 is going to bring between crypto winters and polio and other things. What I do know is that we will continue to remain focused on our mission and on building policy that protects consumers, protects the safety and soundness of institutions, creates a sustainable market for crypto and blockchain. I think very often those things are presented as diametrically opposed, right? You can either protect consumers or you can be good for business. And I think that's especially true in the financial services policy space for some reason. I will fully admit that it is harder to do both, but it's fully possible. And you see when you have clear rules of the road, and I urge other regulators to make rules because that's how we govern the space transparently, that you can, in fact, protect consumers. And I think we've done a good job of that in New York and grow a robust marketplace. In fact, in 2021, 41% of venture capital and private equity investment was in New York-based and regulated crypto companies, which is 2x San Francisco, 8x Miami, right? So I think the proof is in the pudding there. So I think you'll see more engagement, more guidance from us on our requirements for consumer disclosures, for capitalization, on cybersecurity, on BSA, AML. We're really the only regulator that has those requirements for the crypto space. Just more transparency, engagement, and guidance as the space develops.
Right. So listen, you've got a fabulous audience here that represents, again, the globe, government, private business. So is there any message that you would want to get to this audience that hasn't come across in the questions I've asked you so far?
Yeah. So, I mentioned companies coming in and talking to us, which we love. And I mentioned the speed of licensing and new product approvals. We are working very hard to streamline operations, but we are not going to sacrifice our regulatory standards in order for speed. And I know I did talk about this a little bit, but I think it bears repeating. And what I would say to folks is we see often companies coming in and they say, oh, well, your regs require that you have a cybersecurity policy. Here's our cybersecurity policy. I kid you not when I say companies will come in with another company's cybersecurity policy, including the other company's name throughout the document. Did we all not learn the plagiarism lesson in high school? Like, don't. And then and the companies come in and they say, we've got a cybersecurity policy. Check the box. Next, like, give me my license. It's not the way it works, right? You need robust policies and procedures. You need the resources in your compliance department that scale the same way that your product development, your engineering staff scales. This is not a check the box exercise, and we are not here to make your lives unnecessarily hard. When you meet New York's requirements, we hear time and time again from companies that, wow, having to level up to meet New York standards meant that we made a much better enterprise across the board. It meant we had to level up our cybersecurity, we had to level up our BSA, AML, and it made for a better company. So I would urge folks to treat the team and the regulations in the spirit of which they're intended, which is not to make your lives hard for no reason. We all have more than enough work to do already, right? But it's to help make your companies better so that you can serve your institutional and retail customers better and make sure the space survives much longer and becomes a more robust part of the financial system.
Well, Superintendent Harris, thank you so much for your leadership at DFS, your leadership in New York State, and your leadership on the global stage when it comes to crypto and blockchain. And thank you for joining us today.
No, thanks for having me. Good to see everyone.